Hi everyone, my name is Amos of 10KB Forex. Just a quick setup in which I'm monitoring or watching at the moment. This is a live recording anyway, and today is 7th 11/2012, and this is 10:15 UK time. And actually I'm looking at weekly at the moment. The time frame you see on the screen at the moment is a weekly time frame. And actually, before I continue, trading forex involve high risk, and you can lose the money you invest. Definitely, you can lose the money you invest. So my advice is, do not invest the money or the capital you are not ready to lose, because any trade you took from this presentation is not 10KB Forex responsibility. It's totally your responsibility. So we continue. This is a weekly time frame anyway, but we're not taking our trade on weekly. We're taking our trade on daily time frame, because the setup itself is happening on the daily time frame. And it's me personally, but I just decided to put it on if anyone is interested. So this is the weekly time frame, and as you can see, the market has been entrapped in this channel for quite a long time, since the market dropped 2008 during the recession. It has not looked back to go up. If I zoom out, say since the market dropped during the recession, it has been in this area for the past 2010, something like that. But that's not what we are focusing on, but it's part of what we are looking at, because the market has been in this range on this weekly for a long time. So if you zoom in, we will see that at this point of a time now, the market came down towards this area. The market came down as it was on its way. This pullback happens here. This doji, green doji, happens. That's where the market established itself, pulled back here, but couldn't go back up. So it continues its journey downward. And don't forget, here the market touches this level, and when it's coming down at this level, it was unable to touch that level anymore. So this is what it did here. So the same thing I'm capitalizing on, that I'm not expecting this one to come back and touch here. That's my own personal view, and that's how I study my own market, read my own market, and prepare my trade. So this level was established, although it didn't touch quite right, but it has established because I got the pullback alongside this long move down. When it was coming back to that level, it just passed through that level. Strong candle, strong green candle. It passed through that level, as you can see. It went up, came back, established that level. Immediately, it went back up. Now it came back and it's touching that level again. And to me, that level is serving as a strong support on weekly. Because it's a weekly, it looks some kind, some kind of irritating channel or ranging, whatever you want to call it. So if we go to our daily chart, we will see what we're talking much better. This is daily chart. As you can see, the eyes area we're talking about. Remember where it does that little pullback as was coming, as the market was coming down, that is area we got that dodgy green candle, and it continued to move down. So it came back here. See, did you see any bounce here? No. The market went through, came back at the top, establishing this step as a support from the top. Remember, resistance, when it was coming back, we were expecting a bounce, but that never happened. But instead, we went through, the market went through, touched it from the top, established that level, confirming as a support. So what happened next? The market moved from there again, up, came back, touching that level right now. That is what is happening right now. Daily chart. That is what is happening right now. As I'm speaking, this is what is happening. So that level that established before shows to be holding. Yesterday, bounced and closed above rank number. Support level, bounce and top of the support level. Today again, the same thing, bouncing at that level. If it closes above the rank number, 50% Fibonacci retracement, why not? Good to long. Good to long, because we've got three key factors telling us the same thing. Three key factors telling us the same thing, that this could be a long trade. One is this, resistance, not holding, breakthrough, came back, support, went up, came back, support. Round number, support and resistance level, horizontal line, and 50% retracement level on the Fibonacci retracement. And for me, if it closes the way it is, if this candle closes the way it is, I will not set my pending tonight, but tomorrow morning I will see what this candle does, and I would like the next candle that's going to open at 11 o'clock UK time to be a red. So that will be the retracement. My pending order, buy pending order, will be at that level. So it will fill me in when it's going up. My stop loss will be just under this element here, round number, support line, and 50% Fibonacci. This setup is totally left to you, but I just let me share what my own idea of trading. And I'm sorry for my way of presentation. I'm new to this kind of thing, and I think I will get better as time goes on. It is your own responsibility to take this trade if you want to take the trade. You can lose money when you trade FX, so don't invest the capital you're unable or you're not ready to lose. Thank you for watching. Thank you very much. Bye.